Hey, I'm Brett Wild. Just wanted to share with you guys a powerful principle as far as return on investment through real estate investing. I know there's several different ways on how to invest money, and you get opinions from every single person that you know that's in the financial industry. I'll show you why real estate investing is the very best place if you want a solid return and you want the best returns. Okay, so this here is a deal that we're going to outline of a townhome that's in Lehigh Exchange, just right off 2100 North and I-15. Okay, the purchase price of this townhome, $302,900. Okay, so right now interest rates, even on a non-owner occupied scenario, is clear down to 4%. That's almost all-time lows. So if you get a 4% interest rate with 20% down, your cash infusion $60,580. Okay, so breaking down as far as the monthly payments go, you're going to pay $830, $831 in interest, $325 in principal, $121 in taxes, $25 a month in insurance, $125 in HOA, and $50 in maintenance. We just budget that in there. I want you to understand one thing though is important, is a lot of people say, why would you ever want to get a townhome for investment purposes? Because you're just wasting $125 in HOA and that's going to kill your ROI. So as far as townhomes and HOAs go, most of the time your HOA pays your insurance, okay, your hazard insurance. And so you'll notice that our hazard insurance is only like $25 a month. That's way less than it generally is. And so you're getting value with your HOA. Plus the HOA is going to cover all your yard maintenance, and then they're going to cover from the sheetrock out. So you're getting lots of value there. When you invest in single family homes, which is okay, generally speaking, the first thing that goes south is your yard, because tenants generally don't really care about the yard as much as you would. So that's one reason why I really like the townhome model. So adding all this up, you're at $1,477 a month for your total payment. Okay, so let's look at the first quadrant, cash flow. Everybody thinks when you talk about real estate and real estate investing, most people think that the cash flow is the most important thing to consider when you're looking at real estate investing. Well, how much am I going to make a month, right? In this scenario, you'll make $273 a month, which is a really pretty good cash flow. Most investors' benchmark is like $200 a month. So let's break this down. If you're at $1,750 total rent, which is actual rent amount, that actually might be a little bit low in Lehigh. If we go off $1,750 rent for a 3-bed, 2.5 bath townhome, your expenses are going to be $1,477 a month. That's a cash flow of $273. Okay, now we got to look at this. What's our return on investment on our initial cash investment? Okay, $273 a month cash flow times 12 months is $3276 per year. Okay, so we need to divide $3276 by our initial down payment of $60,580. That takes you to 5.4% return, just the cash flow piece. That's decent. It's not the best, but it's a pretty decent return on investment. Where you're putting your money now, or you're getting a 5.4% in your CDs and other mutual funds or stock market or anything else, check and see. But as far as this goes, our cash flow alone is going to get you 5.4. Okay, so that's number one. Number two is appreciation. On average in Lehigh, over the last several years, we've been averaging above 5%. In fact, there was just an article that came out on KSL, the Salt Lake Board of Realtors, projected that Lehigh is supposed to be over 10% this year, 10 to 12%. So this number is actually very conservative. But going off a 5% return of $302,900, because we get to appreciate the asset, the total value of the building itself. We're not looking at our cash on cash anymore. We're looking at the whole building. So $302,900 purchase price, 5% is $15,145 yearly. Okay, so $15,144 divided by the $60,580, which is with our down payment. That's an additional 25%. This is the big whopper. 25% of yearly return on investment from our cash flow, okay, our down payment. So what's the third thing? This one's a little bit more complicated to understand. I'm not a CPA or an accountant. However, I did review these numbers with my CPA and he confirmed this was accurate, okay? So there's two ways that you can get a return. This is gonna be on the back end. So when you go file your taxes every year, you're gonna see some savings because you bought real estate. So the more real estate you own, the more you're gonna save in your taxes. I'm gonna go off a person that has a yearly income of $100,000 a year. Their tax bracket is 22% if they're married, okay? So, depreciation is the first thing. Now, did you know when you buy and own rental properties, if you rent them, this doesn't count if you occupy them, but if you rent them, you get to depreciate the asset over 30 years, okay? So you take the full sales price and just divide that out by 30 years, that's $10,096 every single year. Now, if you're in a 22% tax bracket, and if you're at a $100,000 income, that's going to be $2,221 per year of depreciation that you'll get back on your taxes. The second thing is your mortgage interest, okay? You get to write the mortgage interest off on your home as far as right now. We hope that doesn't change. That could change in the future, but right now, that's the way that the tax law reads. So if we have interest of $831 a month of our total payments, times that by 12 months, that's $99.72. And again, we have to take that back into our tax bracket of 22%. That's $21.93. So we get to add the $22.21 and the $21.93, which is $44.14. Divide that by our cash investment, because all we did was brought $60,580 of our 20%. That's an additional 7.3% return. Pretty good. Let's talk about the last thing. If your tenants are paying your mortgage, is that coming from your money or their money, right? So you're gonna get, of your payment that the bank's charging you, you're paying $325 a month. It's not a lot. That'll increase year to year, but your first year, you're $325 in principal pay down every month. Times 12, that's $3,900 a month. $3,900 divided by our down payment is 6.4%, okay? So add these four together, and that's gonna total 44.1% return on investment. Where are you gonna get 44% return on investment on any other avenue? This is awesome. Let me tell you another quick story why this is huge, okay? Not only is it a great percent of return, when I was in 2006, I bought my first townhome. In fact, it was only a couple blocks away from this one. And I bought it for $179,000. And it was a pretty good deal then. That was in 2006. Well, what happened in 2008 is the market started to decline, and I had just built a different home, and so now I moved out of that home and I had renters in this one, and I was in the one I owned, and I was getting $1,500 a month in rent. So when the market crashed, I couldn't refinance either property because I was so upside down in them. But what was cool is I continued to get $1,500 a month from my townhome month after month after month. And I was freaked out of my mind because I knew that my townhome went from $179, it dropped clear down to $135. It was the lowest it went. And so I was so scared I wanted just to sell it because I didn't want it to drop anymore. But I couldn't sell it because I was upside down in it. I watched a lot of my neighbors sell their townhomes and they lost a ton of money. And so because I was forced to stick with it, I stayed in there, and the market started to climb back up in 2011, 12, 13. And in 2015, I ended up selling it for $218,000. So I actually got a pretty big gain off of my original investment of $179, right? So real estate is one of the only things that I know that can do that. If had my money been in the stock market, it would have just basically disappeared. Most people pulled their money out when it went low, and then they didn't put it back in when it went back up. And so I was able to maintain the value of my investment just by being patient, because I had a tangible asset. It was there, and I could continue to depreciate it, and I still got some of these other returns. Plus, I was still cash flowing because my monthly payment was set. So that's one reason why real estate is a great investment, and I think it's the very best investment. So stay tuned, we'll give you a lot more investment strategies and ideas, and we'll continue to find the very best deals, because there's one other way that I didn't even mention on here as well is most of our clients will buy townhomes with a little bit of an equity position. So you might buy into it $5,000 or $10,000 less than what it's worth. And again, that's something you get to add right on top of your return on investment for your down payment. So anyways, hope you learned something, and we'll be in touch.